What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today we are going to go over one of Stacey Burke's best trade setups so that you yourself can begin to identify, and not only identify, begin to master this trade setup for yourself. This trade setup is the first of Stacey Burke's trade setups that I was able to lock down and commit to muscle memory, okay? Now, I have this down. I look for this trade a lot of the times, okay? A lot of the trades that I've posted have been this trade setup, okay? Just like the previous video, not this Friday, but last Friday's DJ 30 short play, right? This is the exact same trade setup that we're going to go over today. Before we get into the actual trade setup, we're going to go over this very simple weekly day count, okay? And this is part of Stacey Burke's work as well, this weekly day count, all right? And when you go to Stacey's channel for the first time, right, it can kind of feel like information overload. There's a lot going on, all right? So we're going to break this down for simplicity's sake. Stacey says if certain things on the channel are confusing you, then just look for setups on day 3s only. And that means Wednesday and Friday, okay? So this is the weekly day count. This day count never changes. It's the same every single week, okay? Monday is day 1, Tuesday is day 2, Wednesday is day 3, and this day count only goes to 3, so it has to start over, right? So Wednesday is day 3, but starts over at day 1. Thursday is day 2, and Friday is day 3, okay? So every single week, Wednesday and Friday are day 3s. So we can look for our best trade setups on day 3s, Wednesdays and Fridays, okay? So here is a general overview of this setup, okay? The setup is known as the 33 trade, or the 333 trade, I sometimes call it, okay? And this is one of the 90-10 probability trade setups from Stacey's playbook, all right? Now, on the day, we're looking for a New York reversal from the high of the day to the low of the day, or from the low of the day to the high of the day. And very often we will be holding this trade until just before the close of the day. And this is one of the trade setups that Stacey says or calls an ACB setup, meaning it ain't coming back, okay? Once this trade setup forms and commences, it's not coming back, all right? And we'll go over that here in just a second when we look at the charts, okay? So this is the overview of this trade. Now, the name of the trade, the 33 trade or the 333 trade, is important, okay? This is going to help you remember what it is that you're looking for when you are getting to your charts on a day 3 and looking for your setups, okay? The 333, 33. This is going to help you, okay? So let's look at the charts here. We're going to be looking at the Euro USD from not today, Friday, but last week's Friday. So here is the Euro USD on the 15-minute chart, okay? And we're looking at last week from Wednesday to Friday. So we've got Wednesday is day 1, Thursday is day 2, and Friday is day 3, okay? Now, when we come to the charts on Friday, we are going to be looking at Thursday and Wednesday to see where we're at on Friday, okay? So we can see that this Wednesday has broken out of Tuesday's low of the day, gives a low of the week peak formation to the downside, right? We're in breakout there on that Wednesday before price pulls back up inside of the range before closing, okay? So look at Thursday, and you see how Thursday closed up high. Thursday closes in breakout. That's a market that closes in breakout on day 2, right? It breaks out of Wednesday's high of the day and closes at the extreme, all right? And you can see that Wednesday did not do that. It did not close at the extreme. It traded down to the extreme, and then price pulled back inside of that range and closed, all right? And a lot of people, immediately when that market closes like that on Wednesday, they would call that a false breakout, okay? But according to Stacey, we do not have a false breakout until the other side of that range has been broken. And that takes place on Thursday, when Thursday breaks out of the high from Wednesday, okay? As soon as that happens, now Wednesday is confirmed as a false breakout. Okay, and I'm telling you this because the false breakout starts the day count when looking for a 3-day setup. Okay, that false breakout starts the other day count that we have not spoken about. Okay, that weekly template day count that never changes, but the 3-day setup day counts, that changes. But this week, it just so happens that both day counts line up with each other, okay? So Wednesday, we have a false breakout to the downside, which is confirmed on Thursday when Thursday breaks out of Wednesday's high. Now, Thursday closes in breakout, meaning it closes at the extreme. This is a market that, according to Jim Dalton, has now closed out of balance. When a market closes out of balance like this, when it closes at the extreme on Thursday, okay, when we open up on Friday, we are automatically up high because that market closed in breakout the day before. Okay, now every single day there are 3 major sessions that trade, and those are, in order from first to last, Tokyo, London, and New York. All right, New York is the 3rd and last session of each day. So when we come to the session, the New York session, basically the cards are all on the table, okay? Tokyo and London have already traded, so we can see what has happened here, and I have each one of those sessions highlighted on that day 3. So we see that Tokyo gives a low, London gives a low of the day before trading back up high, breaking out momentarily, breaking out of that high of the day from the previous day, right? Consolidating. And then when we come to the New York session, and let's take a closer look at this, we are trading at the high of the day in breakout, okay? Right at 8 o'clock, right at 8:30, the New York market is trading at the high of the day in breakout. Okay, and this is exactly what we want to see on the day, okay? We want to see the market in breakout at the high of the day when we get to the New York session on day 3. Now remember, this trade setup is called the 33 setup, okay? Or the 333 setup. And this is precisely because we are looking for a 3rd hour New York reversal from the high of the day to the low of the day. Okay, so we're looking for a 3rd hour reversal in the 3rd session on day 3. Okay, so it's a 333 trade. So if you can remember that, 333, we're looking for a 3rd hour reversal in the 3rd session on a day 3. All right. And sometimes it won't be the 3rd hour, it'll be the 4th hour that confirms this trade, right? But this is exactly what we're looking for. We need it to be in breakout. Remember, we're looking for 3 things, right? We're looking at timing, levels, and behavior of price. So let's go over levels, timings, and behavior of price on this trade, okay? So when we say timing, we mean this trade setup is forming within the New York session opening window from 8 o'clock to 11 o'clock a.m. New York time. All right. And even more specifically, we're looking for this trade to confirm at the third hour of the session. So 10 o'clock or 11 o'clock. Sometimes this trade will include the fourth hour, but what we're looking for, okay, is an hour up, an hour sideways, then an hour down, okay, or an hour up, an hour and a half sideways, an hour and a half down. All right. So timings. That's the timings. Now, levels. We need to be at the high of the day or the low of the day, and we need to be in breakout. We need the market to have broken out of a previous daily level. And in this case, we've broken out of Thursday's high of the day level. All right. That being so, as soon as we break that level, we have other time frame traders triggered into this market, okay? So potentially there will be higher time frames driving this move if it occurs, all right? So timings, levels, behavior of price. The behavior of price, okay? We are looking for a reversal pattern from the high of the day in the New York session, okay? We want to see this M pattern, a pattern resembling the letter M at the high of the day. And remember that this M pattern on a small time frame, like a 1 minute or a 5 minute time frame, is an engulfment on a higher time frame. And that is very important because that engulfment shows us that we have trapped traders in the market, all right? Remember that trading is a zero-sum game. So for every winner, there's a loser. But really, for every buyer, there's a seller. And for every seller, there's a buyer. So if smart money is setting up a sell-high opportunity on the day, they need a sucker to take the opposite side of that trade, okay? So as soon as we trigger other time frames into the market, okay, we've got breakout traders in the market who are buying this market because it's in breakout and they believe it's going to continue its momentum to the upside. All right, because we had the false breakout on Wednesday, Thursday closes in breakout, Friday breaks out, they're continuing to buy this market. All right, and these traders are trading on higher time frames, like the daily time frame, right? So where, if they buy in, right, they're buying the high of the day, and then we are engulfing even their entry, okay? So these traders who are trapped long at the high of the day are immediately thrown into drawdown. All they see is red. They're experiencing max pain. Remember, smart money isn't going to walk up to you and ask you if they can have your money. They're just going to take it out of your account and put it into their account. That engulfment is showing you where the trapped traders are on the wrong side of the market, okay? And because we have these trapped traders that are trading on other time frames, this is precisely the reason why this is a 90-10 setup, because it's not going to come back up there. If it did come back up there, that would be letting these traders who are now trapped in a bad position out of their bad position at break even or a small loss. And that's just not how the market works. There is no mercy shown to the loser, okay? These are the types of trades that blow accounts, okay? It's moving with a purpose and with an intention. Do you understand? And that is so important. You don't have a setup without that. You understand? So let's just take a little bit closer look at this pattern, okay? Here's your M at the high of the day. Now you can see that there was a little portion of price action to the left that was actually trading higher. And if you were to look at that, you would see on a 1 minute time frame that there is a small M pattern at that top too, where you can see those two doji candles. That's your M pattern right there. It's very small. And this is part of the trade. You're going to see patterns within patterns, okay? Because multiple time frames are being triggered into this market. You understand? Everyone is being triggered into this market. And this is what gives you a 90-10 parabolic trade opportunity to trade alongside of smart money, to ride the wave of a whale, right? So that is the 33 setup, or the 333 setup. Okay. And I hope that made sense for you. Please feel free to reach out in the comment section, ask any question that you might have, or if you're familiar with Stacey's work and you'd like to add your opinion, you know what I mean? Please do so. This is all about trying to help the next trader out. Okay. So this is the setup. This is only one setup, okay? And Stacey recommends that you master these setups one at a time. You don't want to confuse yourself by trying to master 4 setups all at the same time, right? Take it slow. One setup is all you need. This is about being patient, sitting on your hands and waiting for that one good trade. That's all it takes. One good trade. It even says in Stacey's playbook, literally, okay? It says that one of these trade setups every few weeks will have significant effects on your account. You understand? So this is only one setup. If you learn to master this, then you can move on to the next setup, and you'll have soon enough a fully equipped utility belt, all right, with different tools that you can pull out during different situations, because maybe this trade setup won't form every single week, all right? You might be waiting for a week or 2 weeks for this thing to set up, and that's why when it sets up and we're as close to a sure thing as possible, we're going to load the boat. None of that 1% nonsense. On a setup like this, you can afford to go in a little heavier, especially since you're waiting so patiently for this opportunity to come, okay? Now, I did us all a favor. I went through the entire U.S. oil chart from the beginning of this year, and I tallied up every time that this trade happened. And I only looked at Wednesdays, I only looked at Fridays, and I made sure to stick strictly to the criteria that I spoke to you about today. A market in breakout, with this trade forming at the 3rd or 4th hour of the New York session on a day 3, right? And this setup has formed like 26 or 27 times just on the U.S. oil market alone, all right? So if you're hunting for this setup through a decently diverse basket of financial instruments on the day, you're going to find it more common, right? It happens in every single market. This is a rinse and repeat, scalable trade setup, okay? This is all you need. Something like this. A few things like this, and you are well on your way to success. You understand? No more of that bullshit from these people online, okay? I could give you example after example. One day I'm going to make a compilation video, bro, just of these poor excuses for a setup that I see on Reddit and shit like this, right? I'm going to show you the types of trades people are taking, and you're going to see that you were probably taking those types of trades too. I know I was when I first started out, when I was in the demo account and I blew through $40,000 of $1,000 accounts. That's exactly what I was doing. I was trading non-existent imaginary setups. You understand what I'm saying? Bullshit that I heard from people online, like trend line break and retest, Fibonacci levels. I had a friend who literally paid over $1,000 for a course, and all it did was teach you how to draw Fibonacci levels with custom numbers on your chart and trade that, and they call that a setup. That's not a setup, bro. A setup is specific like this. It trades specific times, levels, and behavior, all right? This is a move that is timed and measured. This isn't some bullshit, okay? This is a real trade setup that's happening with an intention and a purpose. That's what's important. That's how you're going to gain consistency. That's how you might be able to retire one day off of this shit, or actually supplement some income and begin to take profits. Become a profitable trader. But anyway, until next time, I hope you continue to free your mind.